Hey everybody, welcome back to another episode of Sunday Analysis, where we do a mental analysis on our mental, honey, before the chart opens. And so this week on Sunday Analysis, we are actually going to do an analysis because I know you all want the education. You want to learn how to trade. Okay, so what I'm going to do is I'm going to break down the trade that I took Friday on ES. Okay, so first thing first is that we are on a 4-hour, right? And so on the 4-hour, these are levels that I had marked out. So on the 4-hour, we're marking out our most recent swing. So this right here is where we were high, and then we actually broke this high, a break of structure. This right here is the most recent low. So I'm going to go ahead and draw a low right here. Now, back to the basics. We are bullish, okay? So that's the first thing that you want to establish. What is the overall trend? Because the trend is your friend. Wherever the market is trending, you want to trend with the market, no matter what. Never trade against the trend. You're going to lose every time. So as you can see right here on the daily, we are clearly at an uptrend. We scale down to the 4-hour. We have our high and low of the 4-hour range marked out. So now we go down to the 1-hour, and on the 1-hour, you clearly see that we indicated that we wanted to go up. Price is actually retesting the indication that it previously made that it wants to go up. So right here, it's going to be our indication. Now, I trade ICC. Okay. A lot of people are like, what's your strategy? I trade ICC, but I do it in a more different way because I like to use Fibonacci retracement to measure the pullback and to measure my corrections. So essentially what I'm doing is if price indicated that it wants to go up here and it gave a pullback for a correction, I'm going to measure this move right here of price retesting the indication. So I'm going to draw my Fibonacci tool from the base body of that indication of these candles, and it's pushing up. I see that now price is pulling back on the 1-hour to the 38.2%, which is exactly what I want to see. So I see that price is pulling back to the 38.2%, and so now I go down maybe to the 10-minute. I go down to the lower time frame to see if structure is being created as far as a bullish structure. So now that I see that price is pulling back to the 38.2%, essentially this is what I am doing. I am waiting, right? I am waiting for price to push up. And so right now I see that price is pushing up. And so with price pushing up, I need price to give me a pullback. Now, the reason why I need price to give me a pullback, because essentially pullback is structure. When price pulls back, it is creating a higher low, which is going to give you confluence on if you should enter or not. So just know that the basics of market structure do matter. If it's bullish, we know that the market is going to create higher highs and higher lows. If it's bearish, we know the market is going to create lower lows and lower highs. So essentially, we see that price is pushing up. We need price to pull back, give us a higher low, and then continue up, breaking structure again. Because if I look down at the 5-minute, I see that we broke a high right here on the 5-minute. We broke a high right here when we pushed up. So I need more confluence. I need price to show me that it wants to go up. So as you can see, price pushed up and it came back down, retesting the 38.2%. But I also see that we wicked to the 50%. So price is pulling back and testing these premium discount levels of the Fibonacci, which means that price is collecting liquidity. I call it collecting the bag, so that is essentially what a correction is, liquidity. So if you look right here, you see that price gave us another swoop down. Again, it broke structure and it created a lower low. So again, we are waiting, right? We need price to push up. And so you see right here, when price pushed up, it created a lower high. So again, we need to wait. We need structure to show us that price wants to go up. And so right here, you see, boom, we have a higher low. So with that higher low, we need price to create a higher low and break structure to create a higher high. So now we move forward. Boom, we have structure right here. Price just pushed up and broke all of this structure, creating a higher high, and it gave us a pullback. So I'm going to go ahead and mark out my TPs. My TP will be right here, and it will also be right here. Because mind you, this Fibonacci measurement was based on the 1-hour. So right here would be TP1. And right here will be TP2 on my fib tool. And I go over all of this on YouTube, on TikTok. So if you want to learn for free, follow me on TikTok. If you want a one-on-one, because sometimes I can teach this and it still don't click, and everybody learns different. Everybody has a different perception of how the market moves, how it looks, and your perception is different too. So I recommend booking a one-on-one, getting all the information that you need as a trader, because the goal is for you to not have to book another one-on-one. Okay, so book your one-on-one, get with me so we can get you into an alignment. Now back to the charts. So we see that price is giving us a pullback. So again, I need price to pull back at a healthy pullback. So if I'm measuring this impulsive move from here to here, I see that price pull back and rejected the 78 right here at the 78.6%, right? So price rejected breaking that level. So again, I need to wait. And a lot of times we want to enter the market, right? But this is a waiting game. You have to wait for confluence. You have to wait for confirmation before you enter the market. So as you can see, we have a breaker structure right here and we have a pullback. Now, sometimes you can enter at the rejection candle because you see that price is rejecting a level of structure. And so now essentially, again, I can aim for TP1 or I can aim for TP2. Now I'm going to aim for TP2 because we've already shown how high price can go. We already know that it is a bullish market, right? So I'm going to go for TP2. I'm going to bring my stop loss down here below this wick right here, which is liquidity as well. So now we let the market play out. And so you see that price started to push up. Why? Because we were patient, because we waited for our setup. We waited for structure to break. And then price came down and created a higher low, which is where we entered it. And then price continued to push up to TP1, right? So if you look at the time, this is around London session, right? And that tends to happen. I've noticed on ES where structure will start forming around London session, consolidation and things like that. So that way that when New York session hit, we can get an explosion move. So now I'm looking and I'm seeing that we are pushing up and we pushed up to TP2. We took TP2 and now we are out. Now with that, if you want to re-enter, if you look and see, price is already giving us a pullback to TP1. And so again, I go back to my Fibonacci tool essentially to where I measured that full impulsive move on the 1 hour. Because now that I see that price is pushing back and it is indicating that it wants to go up, now I know that, oh, well, I can aim for TP3. Right? But again, the only reason why you will be confident in aiming for TP3 now, because now you see that price is giving you a pullback. That pullback was created for a higher low in a bullish market. It never broke structure. It never broke structure to go down and show you a reversal, right? And so a lot of times people get confused about a reversal, or they get confused about if price is just pulling back, when all you have to do is be patient. Because if you look even on the 10-minute, I've been liking the 10-minute lately, I'm not gonna lie. But anyway, you see that we had a low right here at TP1. Price pushed up and pulled back and it never broke that structure. So with that being said, I'm gonna wait for price to continue to push up, rejecting that area. So again, I can wait for price to break structure right here or come above this level of support, right? Or resistance, my apologies, this level of resistance, because TP1 just turned into a level of support. So now we are pushing up, and that will make me confident to enter again, because levels of support is going to push price up. And so I'm going to go ahead and enter, right? And I'm going to go ahead and aim for TP3. Now my stop loss, I am going to give it a little bit of wiggle room, even though that I see that price. So I even make my stop loss the indication, just to be sure, just to be, safe or whatever. But I am safe with doing that because I see that price created a higher low. And so if price pulls back and break that higher low, then I know that price could be doing a deep correction on a higher time frame, or price could be reversing, right? So these are things that you look for when you are entering the trade. And what happened at the rejection of the level of support at TP1, price began to push up. Why? Because we are trading with the trend, honey. And so as you can see, price is pushing up. And what did price do? Price actually went up, hit TP3. Now I did get those TPs. Coach V ain't gonna lie, I got the TPs, okay? But I'm showing you how powerful it is to trade with the trend, okay? Everything that I have shown you has been purely on market structure and what market structure is showing you. So like I stated, a lot of times we make trading complicated. Okay, so again, watch these videos over and over until it makes sense. Book your one-on-one so that way that you can get the clarity to be sure that you are on the right track when it comes to entering the market. Yes, this looks easy. It looks like an easy setup, but the market does not always give you setups like this. It gives you different types of setup, and my goal is to train your eyes to see them no matter what, right? So this is how I am able to take these big long trades that you see me post, because I am looking at market structure. I'm studying the characteristics of what it is showing me, and I am entering with confidence, because as you see, confluence, you need confluence to have confidence to enter the market. Okay, and so this goes back to when you are dealing with life and you need certain confluences to give you that nudge to let you know that you are in alignment. And it could be little things like, keep going, y'all. Like, really keep going with this. Okay, your confluence is going to come in life when you keep going, when you keep losing and you keep going back into the market. Okay, get to the basic of market structure. That is the best advice that I can give you, and I wish that I can go back and give myself the same advice. Study market structure, study the characteristics of what a bullish trend is, higher highs and higher lows, and what a bearish trend is, lower lows and lower highs. Okay, the Fibonacci tool is there as confluence as well as key levels where price could potentially go. It's not saying that price is going to go there. It's basically stating that based on this impulsive move that price made, based on this pullback of the the retraction, the pullback, right? The retracement of price pulling back. Based on all of these things, price could go here, here, and here. But all of this takes patience, y'all. Okay, so again, I hope this helped. Okay, because I love teaching y'all. I love the one-on-ones. I love having y'all in the course. Y'all have great, amazing questions. So again, if you want to book a one-on-one, go ahead and click the link in my description box. Okay, watch this video over and over until it makes sense. Until next time, thank you for tuning in to Sunday Analysis. Ashe. It really is. I can tell you to keep going, and then in the midst of it, you do things to comfort you in the moment.